It is a real pleasure to be joined by Alison for this conversation this morning. So thank you very much for joining us. And we'll dive right in. We'll talk about your commitment to sustainability at NatWest and what you're doing and what you're learning, what you're bringing. If we start with the role of leadership in this, we just heard Mike Bloomberg's words on what he thinks is important in terms of leading the business I work for. I wonder how you make sure that you set the right tone, that the message you want to communicate to your staff really gets through.
Yeah, I mean, we've been very clear that the climate emergency is the biggest challenge that we're going to face. And as a bank and the leading bank in the UK, we have a real role to play with where finance goes and what we do. But we've made it strategic. I think how you communicate to your employees and make it clear. This isn't a sustainability project on the side. The climate transition is a core part of our strategy. It is embedded in all of our targets to the market. It's embedded in our remuneration. It's embedded right the way through the organisation. And we've been very clear that what we want to do is get our own house in order, to end harmful activity, and to fund and finance the transition to net zero and build powerful partnerships. So we're very clear on the strategy and it's embedded right the way through our organisation.
OK, so embedding it, not keeping it sustainability project on the side is important. You're heavily involved, clearly, we'll talk about what your business is doing with the climate transition plan, but you're also involved in a UK task force around climate and GFANZ. Mike Bloomberg was just referencing your commitment there. So interesting to get your assessment of what kind of momentum you think the climate movement has towards COP28. A global stock take at the end of this year in the UAE. How would you mark the scorecard?
We're falling behind globally. It's complicated, but it's imperative. I mean, I don't talk about it about climate transition. I talk about it as climate emergency. And this isn't going to happen unless the public and private sector come together in order to drive this change. I think there is really good momentum that we've driven. You know, GFANZ, of which I'm a founding member, huge amounts of private sector money, huge mobilisation, real change and real drive. But it is at the practical level. How do you get those public and private sector partnerships? And fundamentally, it's about the targets. You know, the world is heating up. It has really broad implications and we need to make the movement. So the stock take is great, but actually the momentum. And I think one of the really important things is we don't have the luxury of waiting. As someone in a PLC where I've set really clear targets, I'm accountable to the board and my investors and, you know, all that scrutiny. We don't have the luxury of waiting for perfect data. We've got to get going. We've got to keep moving. And sitting on the sidelines and waiting isn't good enough. Okay. We've got to keep going.
So 7 years from Paris and 7 years to 2030, where a lot of countries have goals, including the UK has important goals around 2030. A step up in momentum is needed.
Step up in momentum is needed and more alignment between public and private sector. This is not something that one country, one organisation can do on its own. We really need that alignment between public and private. And that's where, you know, particularly we focused on those public-private partnerships to unlock and put practical help in the hands of people. One of the things I think we forget is for big organisations and at a country level, you have huge amounts of data, you have huge amounts of resource. If you're an SME running a small business, you know, you don't have the resource to measure your data or look into your supply chain. If you're an individual home buyer, you need information to help you do it and choices. We have to address the whole system, not just at the top level.
And so let's talk about what NatWest is doing. Your climate transition plan released, I think, in February, gave a sort of sector-by-sector detailed breakdown of your aim to halve emissions from the companies and businesses that you finance by 2030. So that's your 2030 commitment. I mean, that's talking scope 3, isn't it? That's not your emissions, it's the emissions of the businesses that you serve. Are you concerned that you might not have the tools to influence what they're doing?
So, I mean, we're one of the very few banks that have science-based targets. So exactly, this is our scope 3. I think what we have to do is put the tools in the hands of our customers and then direct our financing in order to enable to do that. So it's not one thing that you can do, it's really the tools. So for SMEs, who in the UK represent 50% of the turnover of this country and 60% of the employees, it's putting in their hands things like Carbon Planner, which is a digital tool that helps them measure their supply chain, and then we can put cheaper finance in their hands to make the transition. It's the consumer on the high street where we have an app called Kogo with a fintech we partnered with, which measures as they buy what their carbon footprint is, what the impact is. And it's everyone making those small steps. But it's tough for people. There is still a green premium. There is still a gap. It still costs money. And so what we have to do is make sure we give them the information, the tools, and the financing, and then get the public and private sector to work together.
Okay.
A great example, just to give one, farming is, Mike mentioned it, agriculture sector in the UK represents 10% of the carbon emissions in the UK. It's 20% of the emissions on my book. We are not going to stop lending to farmers, but productivity and sustainability are not mutually exclusive. So we're working with farmers to help them finance the transition, to give them tools and data, to help them invest for more renewable financing and make that transition. And that's the real level of practical steps you have to make in order to make the full movement.
Okay, so that's what you're doing, and that's an interesting example around agriculture and the different goals you're setting around different sectors. Let's talk about oil and gas then, and what you do with that sector. I understand that you're stopping offering loans to new customers in the oil and gas area, phasing out such loans for continuing customers, but no hard stop. Do you think that's the right balance then between what you want to do for the climate and what you want to do to ensure transition?
Yeah, and I think this comes down to, we've got very clear policies on oil and gas. So oil and gas lending is only 0.7% of my balance sheet. We will only work with oil and gas companies who have a credible transition plan aligned to Paris. So we're working with them, and a lot of the oil and gas companies are funding some of the renewable, some of the capital extension. Coal we're phasing out. Our exposure to coal, 3 years ago was 600 million, it's 300 million, it will be phased out. And we're not doing any new lending, as we said. So I think making sure we fund the transition, and an important aspect of this is we also need to make sure that we're transitioning the whole sector and not exclude, from a socio-economic perspective, people who can't afford to transition. So we're being really robust on the data, the disclosure, but making sure it is aligned with Paris. And we've exited over $1 billion of exposure to oil and gas because their transition plans are not good enough. So that's how we're...
So there are companies that, you cut them off, or you...
We no longer lend to them. They have to refinance and we phase out. But what's really important is you don't push the hard-to-abate financing sector out of the regulatory and system, because we want that transparency and disclosure. And there are going to be hard-to-abate sectors, but let's keep them transparent and not in another part of the financing economy that we can't see, because the ultimate goal that we have to keep our eyes on is getting the carbon out of the atmosphere and making sure we're growing new technology, new renewables, enhancing the use of that. So we will finance oil and gas, 0.7% of our balance sheet, only if they have credible transition plans.
So if they have credible transition plans. One of the criticisms of that approach, I suppose, could be that if you don't fund oil and gas, regardless perhaps of some of their commitments around Paris in the North Sea, that then you're just you make the country more reliant on imported fuels from other parts of the world, and we have maybe less visibility or insight into climate commitments there. That might be far away from a bank CEO's mandate, but if you're stepping into this kind of differentiated lending, you put yourself in that conversation.
Well, I think it's an important conversation to be in. Energy security has become, incredibly critical, as has sustainability of our energy supplies. But we have huge amounts of investment in solar and wind, and there are massive amounts of projects that are waiting for approval that we can continue to fund. We need to get access to the grid, we need to invest in getting planning working, we need to get the housing retrofitted. So there's huge amounts we can still do. The UK is a poor performer in adoption of heat pumps, which can make homes more sustainable and more viable. So it is, I think, it's too simplistic to say oil and gas bad, solar good. We've got to say invest and continue to drive solar, to drive wind, to drive renewables, and transition away from oil and gas in a responsible way.
Okay. You've mentioned, we've talked in detail about some of the plans that you have. The government still owns 38%, I think, of NatWest. Does this make any day-to-day difference to the commitments that you have to make around this versus other parts of the banking sector?
No, not at all. The government are a great shareholder for us. We're very aligned. They would like to not be a shareholder. We would like them not to be a shareholder, that in a very positive, mutually supportive way. But they don't sit on my board. They're not involved in our day-to-day. So this is very much, and they are very supportive of our strategy as a shareholder, of which climate transition, the 100 billion we've committed to fund and finance that is a core part of our strategy.
You mentioned that you have these SBTIs, so Science-Based Target Initiative, where you're going for approval there.
We are approved.
You are approved.
We are one of the very few global banks where all of our balance sheet and our targets are based on science-based targets, which are signed off.
Okay, and you're also a member of a task force appointed by in the UK around energy efficiency and crucially sit on GFANs, as you've mentioned. Has that wider role outside NatWest, has that really influenced, Alison, the conversations you have around sustainability within the business? Does it help to get that sort of broader perspective?
Yeah, I mean, I think we've always said that the way you will do this is with partnership. You need a line partnership, and of course, you know, being co-chair of the Energy Efficiency Task Force is I can bring more private sector into that partnership with a detailed view of government and the public policy. But we're working really broadly with partners, and I think it is that interlock and unwind that we need so that we can solve this together.
Is that the answer, partnership, is that the answer on retrofitting homes then? Because I know that you've said that this can be done at scale, it's achievable, it can be done affordably, but paid for by whom? Because this seems to still be a real open question, such an ageing housing stock in this country.
Yeah, I mean, the UK has the oldest housing stock. And yes, and there's an enormous opportunity, and I think this is one of the things that really can ignite. If we look at the need to retrofit homes, the transition that the UK can make. There is a £175 billion revenue opportunity for SMEs in this country to be part of that retrofit and transition. 260,000 jobs that can be created, 40,000 new businesses. So as a business commercial opportunity, that is enormous. But we need to create the interlock. It's just too hard for a consumer to decide, you know, I've got to pay for loft insulation or a heat pump. Is that good? Is that bad? Is that
find somebody to fit the heat?
Find someone to fit it, you know, to get all of those details. We need to get that interlock between, you know, skilling up more people into the ability to do that, to get it really clear and simple so they know where to go and that the cost of it can be financed in a cheaper way. So one of the things we're building in partnership is a one-stop shop where we're going to bring together the providers, cheaper financing so it doesn't cost you as much, the insight and the data so you can see the benefit that you're getting. And then one of the things we're working on with the Energy Efficiency Task Force with the government is to say, how can you create those right reward incentives to help it be an easy and simple and frictionless decision for someone who's making that about their house.
What progress is the government making on its targets? Because some years ago, the UK seemed to be sort of leading the way in setting ambitious targets, but actually delivering on the smaller scale plans to get to those targets seems a little elusive, and it's faced criticism from many quarters. I saw, the reports out this morning, but Wildlife Fund, plenty of bodies also criticising the government for being too slow on this.
Yeah, look, it's difficult, but I think we just do need to move faster. I mean, we're partnering with the World Wildlife Fund to work with government and farmers and trade bodies and NGOs to say what is the solution so that we can get out there. And I think the Energy Efficiency Task Force is a great example of how, you know, the government is trying to find how do we get this complicated unlock and this link between public and private so we can really move the money to the right projects to have the biggest impact.
You were talking about moving the money to the right projects. You've also been issuing green bonds.
We have.
What's the market like there? What does demand look like, that experience?
Yeah, look, demand is really good. I mean, reasons to be optimistic. I mean, we've got a terrible challenge, but reasons to be optimistic. I mean, less than 18 months ago, I made a statement to commit £100 billion to fund and finance the transition through the issuing of green bonds, which is part of that. We've already delivered 40 billion, you know, in a relatively short period of time. So the demand is there. We're seeing huge demand for green bonds, for infrastructure finance, demand from companies to refinance their supply chain and work in partnership. So it is there. We've just got to make it easier and more accessible and move faster.
We've talked a lot about climate, and sustainability, of course, comes in many forms. Also, social bonds. You've been issuing those. I think in March you issued a social bond linked to women-led enterprises, which provides new loans, new financing to those enterprises. What caps demand for that sort of project? Whether it's green bonds or social bonds, how does the market look?
Yeah, look, we managed to raise, 500 million for the female entrepreneurship bonds. I mean, female entrepreneurship in the UK is a massive opportunity. Some of the research I did as part of the Rose Review identified there's a 250 billion revenue opportunity for the economy if we can get access to funding, and women starting and scaling businesses is the same as other high-performing countries. We're seeing record number of young women starting businesses. So in the 16 to 24-year-old age group, it's almost tenfold increase in 3 years. So the more women that start businesses, the more SME, the more lending we can provide. We can package those bonds, sell them, and then reinvest them. We also raised a £1 billion bond for investment in social housing, and we've also the green bonds that we've done. So the demand is there. It's packaging the assets and making sure that we can deliver them, and that's a core part of how I'm shaping my balance sheet and lending.
Okay, and none of this sustainability conversation happens in a vacuum, of course. It happens against an economic backdrop, which maybe we'll spend a moment just thinking about. I know the Chancellor, Jeremy Hunt, has been meeting with all kinds of sectors to try and see what they can do about the cost of living crisis in the UK. And you clearly want to invest in technologies that make it easier for your clients to be greener, but at the same time you're under pressure to increase rates on savings accounts. What is that conversation like with government at the moment?
Look, I think at the moment you're in, the economic dynamic of wrestling inflation to the ground is a really difficult problem, and that's eating into people's disposable income, and interest rates are going up. So there are real challenges of cost of living, and anxiety is, for a lot of people, they've never faced a rising rate or inflationary environment. So, my job is to support our customers through tough times as well as good times, but also build long-term sustainable value. So we're putting lots of measures, funding in to the lower decile households, because those are the ones who are feeling the real strain. So when you talk about cost of living, lots of anxiety for customers of rising rates, come and talk to your bank. We have huge amounts of support we can give you. Help people save. People have got out of the saving habit, so we have, digital regular saver accounts paying 6% to help people save. You can get 5% interest rate on your savings accounts.
And to savers tell you they want more? No, in a rising rate environment?
Well, actually, what you have in the UK is 85% of our customers have less than £5,000 saving in their account. 1 in 4 people have never saved money in the first place and have less than £100 saving. So actually, we need to make sure we're passing on rates to help people, that we're helping those lower decile income households who, by the way, don't have a mortgage and don't have any savings, and where cost of living is really causing a crisis, and that's where we need to help. And then we have to help people transition through this period.
So that's the focus for the business around those who really struggling at this point. What about those mortgage borrowers? And I appreciate not everybody has a mortgage, but what about the mortgage borrowers? How many do you think of your NatWest customers? What's the latest thinking of those who are going to miss payments and therefore be eligible for these government schemes that are being talked about? 12 months grace period on your mortgage, or going to interest only, those type of things.
Yeah, well, what you can see from so we're helping our customers as they come off fixed rates to find a new mortgage and all of that support. What you are actually seeing is at arrears level, so people who are missing payments or in trouble, is less than sort of 0.4% of our book. If you look at the Bank of England data, 0.5% of people are in arrears. Pre-COVID, that was 3.29%. So people who are in genuine distress and can't make their mortgage repayments, there is huge amounts of help out there.
Yeah.
Actually, what you're really seeing at the moment is people are facing the impact of coming off lower rates onto higher rates and their disposable income being squeezed. And that's where we're putting all of that support in place. So the arrears level, are at super low levels, still below pre-COVID levels, but anxiety is really high. And that's where there's lots of support. Come and talk to your bank. They will help you with lots of different measures. We have something called a free financial health check, where we bring everyone's balance sheet together and say, okay, what are your different options? How can we help? 9 times out of 10, we save people money.
And what do you expect to happen to the UK mortgage market with all of this in mind, the rate at which we've seen these rates go higher?
Well, the mortgage market is much smaller this year. We always said it would be much lower. And really what you're talking about is a remortgage market as people come off mortgages. We're seeing, if I think about our book, over 75% of our customers are on 5-year fixed rate. So people are coming off their fixed rate and looking for new deals and then sort of trying to decide what to do. So I think lower volume, you are seeing house prices drop, you are seeing people, actually consumers behaving really rationally. They're adjusting their spending to deal with the sort of inflationary environments, and then we're working really closely with them to help them find the right deal for them.
Okay, Alison, thank you so much. Thank you very much for joining us. Alison Rose.
Thank you.